Welcome back to the fourth part in a KPMG Africa Conversation Series. I'm Alishia Seckam and we're broadcasting live from the KPMG headquarters in Johannesburg, South Africa this morning. Of course, with me this morning in conversation is Dr. Greg Mills. He's the director at the Brenthurst Foundation. Gloria Sirobe, who's CEO of WIP Capital. Glenn Ho, head of local China practice in South Africa at KPMG. And then Katinji Kiragu, who's director at the African Development Professionals Group in Kenya, joins our conversation from our studios in Nairobi as well. We're taking a look at the economic love affair between China and Africa at this stage. Glenn, let's take a look at this because we've been talking about resetting the agenda. If we look at rules of engagement right now, some argue that, that bargaining chip of infrastructural development, for example, holds less weight in South Africa. Instead, South Africa should be trying to get China to concede to more favorable trade conditions, for example. Do we see there being a confidence in the South African government side of things to set the new rules on the table and establish those, those new rules of engagement?
I think as Gloria made the point earlier, I mean, Africa, and especially South Africa, we've got such good systems here, and maybe sometimes we don't actually push that strong enough. But obviously we don't know what actually happens between government to government conversations, whether it is being pushed like that. But I think for a developing economy like China's, many of our aspects in South Africa are actually very well developed processes and systems, and those things can be taken up by China to actually improve their own way of governance and of doing things. I think as Greg mentioned earlier as well, we've seen the issue in Zambia. So those issues around engaging with communities and engaging with the people and not just with government are actually very important for China's continued growth and relations in Africa going forward.
Nevertheless, Greg, we had just last month Deputy President in South Africa, Kgalema Motlanthe, returning from an official state visit to China with a number of new signed undertakings. And amongst the lot was, the Chinese government having agreed to facilitate the entry of certain high-value products into the Chinese economy. Is that a step in the right direction?
I think it is. Of course, we have to make them to make sure that we can access that market, and we have to be competitive in that. Now, I think that you mentioned the word love affair. Speaking not from personal experience here, of course, most love affairs go from sort of lust to love to, but an enduring relationship is built on communication. It's built on, as Gloria says, predictability, about establishing trust and the values that go with it. And we sort of maybe just going from the lust to the love stage. And for a long-term relationship, we have to, of course, build that level of communication, that level of trust that exists not just between governments, but between businesses, between business people who can speak the same language, who can deal with the same standards and so on. But of course a long-term relationship, and this is the rider as it were, a long-term relationship and indeed the value of Africa to China depends on what happens in China itself. We always make these assumptions that things are going to remain the same, that what we have at 10, 11% growth in China is going to continue, and thus commodity prices are going to continue. We also have to have a plan B if they don't continue. If growth comes down to 8%, what is the impact for Africa? If it goes to 6%, what's the impact for China as well as Africa? And I think you'll see a substantial change in the relationship, as indeed you should. And we have to have our own contingencies in place to manage those sorts of changes as well. We shouldn't simply assume that we're on a never-ending trajectory of growth and increasing demand for African resources.
Absolutely. Gloria, you've got a comment.
But the main point here for me is that to prepare ourselves as a preferred destination for investment capital, it doesn't matter from who it comes from. That is what we have to do. If it is China today that finds us attractive, great. But the rest of the world must find us attractive. We have all manner of relationships, Sweden, Switzerland, US, the whole works. The criteria is the same. Do the right thing. They want to make sure your rule of law works, you are competitive and all these kinds of things. So, and back to governments changing and all that kind of, government's job is to facilitate and leave the business alone. So for me, it is about us making ourselves the best bride. Is that what it's called now? From lust to love and marriage. We're good at that as women because we want to be the chosen ones. So you have to make yourself to be the preferred destination for investment capital decisions from all over the world. And there's over 140 countries consider you, and China is one of them.
Yeah.
Can I just pick up on something Gloria said? I think it's very important. We have to distinguish between comparative advantages that Africa possesses. In other words, the things that we have, our tourism advantages, and particularly our mineral advantages, energy and non-energy. They are here, so someone has to come here, or we have to dig them out the ground. There's no alternative. And so countries have to come and invest to do that. And competitive advantages, which means that they can go to any country in the world to add value to those products or to do other things. And we shouldn't confuse the two. If we want to get a share of the real money, which is the competitive advantage, the real jobs, which are in manufacturing things, then we have to focus very much on this policy predictability as well as improving productivity.
Absolutely, and our cost imperative as well. Katinji, just taking a look at your perspective, I mean, is it more beneficial where business, or, you know, for business where state plays a stronger hand, or should the state just remain as an efficient provider of a regulatory system that allows business to thrive?
I think, I mean, the world has moved, the paradigm shift in terms of what works, what doesn't work, in terms of development, in terms of economic growth has really shifted, not just for Africa, for Kenya, or for developing countries, but for the rest of the world. I think now every government knows it needs to be pragmatic, but it also needs to be smart in terms of its relationship with other countries. Therefore, we cannot really, I would not suggest that we should adopt either of the two options. I think every case must be considered on its own merit. There are definitely things on which we do very well when our government treats us in the way in terms of relationship with China. There are areas where we will do very well if our private sector in Kenya leads us in our relationship with China. It really must be that pragmatic, and therefore our realism should be the key rather than you know, any dogma, any general rules. I think the key issue here is developing terms of trade between China and Kenya. That is the responsibility of government. And the private sector, as I said earlier, I think in many ways should lead us in terms of both inward investment, in terms of enterprises, manufacturing, and so forth, and also in terms of promoting our exports to China. That is what the private sector should be seen to be providing leadership in.
Of course, China is a very competitive exporter, Kitinchi. For example, it's a net exporter of paper, you know, and its producers are able to, with government support from that end, compete on a global scale because their products come in more cheaply than any other global producer is able to produce, you know, product at. So those uneven playing fields still present a significant challenge, and it's a challenge that we've got cement producers in Kenya facing in a very big way right now, with Chinese imports crowding the local market. Take us through that scenario specifically so that we have a concrete example of what government in Kenya is doing to perhaps facilitate when it comes to the cement industry in the East African country.
Well, one fact is that for a time, I think East Africa generally was short of cement. And Kenya, of course, the Kenyan government has been very ambitious in terms of development of infrastructure in recent times. Of course, we have a partnership with the Chinese in this, partly as contractors, but also partly as financiers. I'm not privy to the specific details of some of the contracts Kenya government has entered into with the Chinese in terms of infrastructure development. What I can say is that, of course, Kenya government also is a major shareholder in some of the cement manufacturing industries in Kenya. And therefore, we are anxious that, of course, those do not go under because of any unfairly priced exports from China or from wherever. And I think the government is alert to these facts, and again, it has the policy instruments and I believe every government has the policy instruments to actually take care of those kind of developments, and the non-government shouldn't be alarmed about it, because there's no reason why, if you have evidence that a country is undercutting your local industry unfairly, then you are in a position to take appropriate policy measures. I think we are at to those issues. Of course, again, we have to handle those things in Kenya in the context of the East African community and the COMESA trade protocols, and that does, of course, add another layer of complications in terms of what responses we can make. But I think as COMESA and as Kenya government, we are at to all these issues, and really, I don't think we have reached a point where we are alarmed. Our businesses in cement at the moment are still making profits. So I don't have the specifics, but I would suggest that, again, I don't think we should react to this dogmatically. I think we should react to it in terms of what specific measures Kenyan government needs to take, or COMESA needs to take as a group, or East African community needs to take to address those issues, if indeed they are real. Thank you.
Of course, we'll be taking a look at those trade agreements and the benefits of them in just a bit. But Greg, before we do that, I mean, I was reading some commentary that what would need to happen is China would need to stop giving export incentives to its firms exporting to the continent, because local manufacturers are suffering from this unfair competition. Politically, can they afford to go down that route, and can Chinese companies compete without that kind of government support?
I think they can. I think they've shown that they can. I mean, certainly government support helps, but subsidies are never a good way to run any business, and the Chinese themselves know that. And I think the more interesting question is really, where are going to be the opportunities for Africa as unit costs rise in China? And there's a huge opportunity here. It's estimated that Asia itself, East Asia and China, are going to shed about 200 million jobs over the next decade. And those jobs are the sort of jobs that Africa could bid for, the sort of thing that Gloria spoke about. But we have to understand what sort of aspects of our own policy environment, our own infrastructure, both transportation, communications, as well as electrification, we need to put in place to actually gain from that opportunity. Yeah. The gilded youth aspect in China, plus increasing demands for salaries, increasing costs of doing business across East Asia. These are all great opportunities for Africa, and we have to be competitive in accessing those.
Of course, as we've been saying, this is why it explains most foreign enterprises in general, let alone China, having not come onto the continent in search for low-cost labor and competitive practice. Glenn, is free trade agreement, the answer to upping the trade ties between Africa and China right now? What benefits are we looking at exactly? Because that's also been brought to questions in terms of what benefits derived from, or what has been derived from these FTA agreements in the past.
Probably not at this stage, because there wouldn't be a level playing field. I think we've seen I think New Zealand has signed one with China at the moment, but I think for Africa, it's probably at this stage wouldn't be in the African interest to do that. But just to pick up on what Greg said about the so-called sunset industries in China, I think that's how China really built its industrial base about 30 years ago. They got a lot of industries that were sort of maturing in Europe and in America and Japan, and they were setting up the factories in China. And what's going to happen in the next 5 to 10 years, we have a demographic change in China with the aging population. So all those young people that have been coming to the market for the past 30 years, there'll be much less quantity, and as Greg said, the gilded youth as well coming forward. So that does create a huge opportunity for Africa going forward. But I think, as Gloria also mentioned earlier, we as Africans need to know what our plan is so that we know what to approach any investor and not just China on what we want.
A little PS here. We have to be very careful about using free trade agreements as shorthand for deepening relationships. Whenever we talk about improving a relationship, we talk about having a regional free trade strategy or a bilateral free trade agreement. As the delay in communications with our colleague in Kenya illustrates, there's a bigger aspect to regional integration, which is logistics. Yeah. If we could just improve the logistics of trade, the costs of actually getting things from one place to another, the costs of speaking to our colleagues on the other side of the continent or on the other side of the world, we could do much better than focusing on jamborees which produce documents which frankly are largely meaningless.
Absolutely, because it lays a lot of that investment imperative on the table. At this stage, we'd like to open up the conversation to the audience with us here this morning. So if you've got any questions for our esteemed panel of guests, please feel free to raise your hand. We've got roving microphones that are doing the round. So if you can just indicate when you do have a question, that microphone will find its way to you. Please indicate as well who that question is being directed to on our panel of guests this morning.
Good morning, Alishia. My name is Thierry. I'm the chairman of South Africa DRC Chamber of Commerce. I've got two questions to ask, one to Craig and one to Glenn. Craig, do you think Chinese investment in Africa, at your own perspective, do you see it as a threat to other foreign investment or an opportunity for growth of Africa? And the question to Glenn as well is, the investment into Africa is going beyond imagination. I just came from the DRC recently. The Chinese just bought two major mining company. But the cost of those deals, other investors, they said this is way beyond the cost. Do you think China is coming to invade Africa, or they see opportunity in Africa in order for them to do trade? Thank you.
Okay, let's start with Greg.
I think there's a lot of scaremongering out there in terms of figures. We always hear that China's going to overtake the United States by, take your pick, 2025, 2030, 2035, 2040. Well, what does that really mean? Is it going to overtake them in terms of per capita GDP? I doubt it. Is it going to overtake them in terms of overall GDP? I certainly hope so for a country which is 5 times larger in population size than the United States. But these are all ways of sort of showing China as a bogey, as a threat to the global economy, to certain vested interests and so on. I don't think so. I think there's more than enough space in the global economy as the pie continues to grow for all of us. And I don't think that China should be seen as a threat. If anything, it should be seen as opening up a whole range of opportunities. You know, 15 years ago, Africa was seen as a problem to be solved by much of the international community. Today, because of China, it's seen as a business opportunity to be engaged with. And we have to thank the Chinese, but also others have to thank the Chinese in that regard. So I don't think anyone should see them as a threat. A competitive rival? Yes, absolutely, and that's in Africa's interests.
Glenn, your response to the conversation as well. Are we looking at an African invasion?
No, I think I agree with Greg's point there, and also to create that competition that we've got choice as Africans to choose. Who do we actually want to do business with, and how do we want to do business? What is best for Africa? And to answer the question as well, there's been many cases where it's been documented where it seemed to be that China's overpaid for certain assets in Africa. But I think for them it's a really longer term play. So they're looking at really long term investments. So whatever price they're paying now, I think they think it's for the longer term and not just a once off.
Just bottom line, are we being swayed too easily in terms of influence, or is that a perception out there when it comes to the deals that we do strike with China?
Probably a bit of yes and no, and I think if we can center our own policies as African countries as to what we want out of the relationships, then we're probably a bit more secure that we're not giving away too much.
Okay.
Well, I think we also have to be careful not to accept this patronization that we are getting all over the place. To be said to be invaded is somehow somebody wants to protect us from this invasion. We are big boys and girls who must protect themselves. And it is always going to come down to, are we investing enough in education around these structured deals? They are sophisticated, they are complex, and it doesn't matter whether it is Japanese or Chinese. Somebody's going to make a big deal if they are not investing in the complexity and the education that comes with them. So I think we're being patronized somehow, and we shouldn't encourage that.
Well, let's take to the floor again. We've got a second question.
Good morning, Petrus Murray from KPMG, responsible for advisory coordination across Africa. And it's a question for Greg relating to your remark in respect of the Zambian election. Do you believe that there is simmering anti-Chinese sentiment across Africa that could be exploited in other countries from a political point of view? Or is this just a once-off opportunistic situation that we saw in Zambia?
I think in many African countries, particularly where there is a presence of Chinese investors or traders at every level, there is a lot of discontent. And the discontent does not really relate to the fact that they're Chinese doing things that Africans perhaps could do themselves, selling chickens in the Lusaka market, for example. But it's because it relates to the fact that there's widespread poverty in many of these countries. And where you have conditions of widespread poverty, you tend to have xenophobia. And we're no exception to this general rule in South Africa, sadly. Of course, immigrants do bring energy and vitality and skills into an economy and capital for the most part, and we should recognize that. But I think because now China and Chinese individuals and companies are operating in this full spectrum, from big investors, multi-billion-dollar investors, to the fellows selling slip-slops in the marketplaces across the continent, rural areas, urban areas, and the like. I think you're going to get outbreaks of xenophobia and simmering discontent. They relate less to China, though, than they relate to the conditions in which Africans find themselves.
Does that answer your question? And we've got a third.
Good morning. My question goes to Dr. Mills. My name is Carlson. I'm a freelance consultant. Greg, where do you think this seeming fear or paranoia around Chinese investments in Africa is actually coming from? Is it coming from Africans themselves or from outsiders? What do you think is actually different between Chinese FDIs and FDIs from Western countries or from Western democracies? I mean, the reason I say that is because I feel what is actually constant is the fact that Africans themselves and African governments don't seem to make decisions based or driven by national interest, but by very narrow political and elitist interest. Having said that, I mean, can you attempt to sort of identify sort of like a reference model or a best practice, both at the top end and the bottom end, with regards to how Africans should be engaging with China? Thanks.
Thank you very much. I think all of the above. I think that the sense, the sort of anti-Chinese sentiment, as much as it is prevalent across the continent, emerges from among individual Africans, amongst organized civil society groups. It's in response to the presence of traders, in response to the way in which deals are cut with elites. And I think that is an important phenomenon, and certainly with the Congo, that was an aspect that upset many Congolese civil society groups, that this was a deal being seen to be cut essentially between the Chinese state or state-linked interests and the Congolese state, and there were concerns about not only about the amount of money on the table, but the amount of money under the table as well, and that this was seen to not only sell long-term assets cheaply, but also to enrich people in that process. Of course, there are those concerned outside of the continent, in places other than China, about the nature, the aggressive nature of Chinese engagement with the continent. But they shouldn't be surprised in this regard, as I've said. I think it's, in many ways, been a huge blessing for Africa that people now see the continent in an entirely different light. So I think that the xenophobia or the anti-Chinese sentiment that arises is really from a whole variety of sources. And it goes back to the point that Gloria has highlighted, which is we shouldn't expect the Chinese to come here as philanthropists. They are not. They're here to make money. And that's very encouraging, that they see us not as a source of their largesse, of aid, goodness help us in that regard, but they actually see us as a business opportunity and as a business partner. And we need to manage that relationship accordingly. We need not to manage it as we manage the relationship with donors, which was essentially with our hands stuck out. We need to manage it with a handshake, and in a completely different way.
Yeah. Well, Katenji, let's take a look at your perspective on Chinese investment and what it does, whether we're looking at it as enough of a blessing right now. Can Chinese investment inject some Asian tiger-like vigor into African economies in your books?
No, permit me first to comment on the earlier point about the xenophobia about the Chinese. I want to say, frankly, and I think I'm reasonably informed that there isn't any serious anti-Chinese sentiment in this country. Partly maybe because they are not doing any mining in Kenya. We are basically, you know, we do not rely on minerals or anything like that on which we can accuse the Chinese of bribing our politicians and so forth. So that I think is an important point. And the second point is that what Kenyans see from China at the moment is how the Chinese are helping this government to realize, and therefore the country to realize its potential in terms of support investments in infrastructure. So far, therefore, I would say, so far so good in terms of Chinese involvement in Kenya. We don't have Chinese in Kenyan villages selling things because actually the Kenyan boys are too aggressive in terms of selling. I do not see how they will do better than the Kenyan young men who are unemployed and who are aching for a living. So I think, well, I've had a perception that maybe we exaggerate part of this. Let me therefore again talk about the politics and Chinese involvement. I think Mr. Sata himself, the new president of Zambia, soon or on the eve of his inauguration, did withdraw his strong and Chinese rhetoric. Part of the major challenge for Africa actually is how we are going to manage our politics in terms of even maintaining our competitive advantage, because with the populist policies, with populist politics, then I do not see us even having the maintaining a competitive or achieving a competitive advantage in terms of labor costs and so forth. And those are some of the challenges our governments have really to look at. And obviously, again, we cannot change the politicians. We can just hope that we have more enlightened leadership as we go forward. In our particular country, Kenya, I would say that, therefore, we see the Chinese involvement in Africa as an opportunity. And we want to make maximum use of it.
Well, we talk about the opportunity coming onto the continent, China presenting some of that opportunity. What about Africa venturing into China? Why is that a less spoken about venture? Gloria, from your perspective?
I have two points to make there. It is not true that Africa is not venturing into China. We have seen our big businesses going into China, of course colliding with some problems of this nature or that nature. But I mean, the sad thing for me was to see the Sasol thing being withdrawn. And it did look for me from a distance, of course I'm not familiar with it, here was the most biggest wonderful project from here to there. And it almost looked like it lacked the state backing of some sort. That's a perception. On the South African side, which then comes back to my previous point, is that South Africans, we've got big platforms and entities to take to China because the whole world looks up to them. And they are used to going there on their own. That's how they've done it before, and they've succeeded. But as the state-to-state relationships getting stronger, the South African business has got to get closer to its own state. And some of the hiccups we are meeting are so unnecessary. But the second thing is that we should do more in terms of going to China. They are really waiting for us as well. That is my impression.
Yeah.
Well,
unfortunately, we're going to have to leave the conversation there. An hour, certainly not enough time to tackle a conversation of this nature or topic of this nature. We come to the end of this hour broadcast from KPMG's headquarters in Johannesburg, South Africa. Thanks to my guests, of course, Dr. Greg Mills, who's director at the Brenthurst Foundation, Gloria Serobe, who's a CEO over at WIP Capital, and Glenn Ho, who's head of local China practice in South Africa, KPMG. Thanks as well, of course, to Katinji Kiragu, who's director at the African Development Group over in Kenya.